Welcome to Java. Thank you kindly for joining me. It's April 17th, 2025. It is also Thursday, but we're going to wrap in Friday because the markets are closed tomorrow. It is in celebration of Easter for the weekend, so I also will not be here Sunday. So there is quite a bit going on. This is kind of the third take here that I'm doing of this. There is quite a bit to speak about, but I did shorten a bit that the algo seemed to not like. So, with all of this, I'd also like to thank everybody that has been here, and especially those of you that have been with me since the beginning. This means you've put up with me for a couple of years now, as we're celebrating with this weekend also starting into the third. So we're watching quite a few things going into this weekend as well. It is not unusual for them to use a longer weekend, holiday weekend, as a rebalancing for some major moves during the day, although there's not a lot on the calendar. So when that happens, we kind of have to stay aware of global events and other issues likely after market close today. So with this, let's get in with what is going on in the markets. Now we've got the fear greed meter has moved deeper into fear territory. We're at 14. Yesterday we're closer to 20. So kind of washed out quite a bit. There was a lot of volatility. It ended slightly down, not too much in the markets. However, this morning it is starting off looking very weak, at least with the open. Futures are looking for a slight bit of a recovery. The Dow is getting hit, but the Dow is only 30 stocks. So we don't really pay as much attention to that as the S&P 500 and NASDAQ, which is tech sector. So watching all of these, we're also keeping an eye on volatility index, which has dropped since yesterday significantly. We've had a few things going on as far as Japan and globally. So that's brought that down as far as fear. Gold also retreating a bit, as we were talking about, is kind of hitting that resistance level. So it has begun that pullback this morning, it appears. We've still got some good support at about 3,100, it looks like, but pulling back temporarily. Now, futures, as I said, looking a bit stronger, except for gold. Crude oil recovering a bit on possible talks. So let's go to the fundamentals, really, is the 10-year yield. Now, there has been an interesting swap out with the debt. All of the big money is swapping out longer term, the 30-year, for actually 2-year debt, as well as shorter term loans. So they're looking at massive changes here, a lot of instability. So they're kind of looking short term, not to get wrapped into these longer debts. But with this 10-year yield is increasing a bit. That means debt selling off. Typically, a lot of this money, when it sells off, goes into risk on assets, meaning the markets, cryptocurrency, and the like. So this could also support the narrative that the market does have some upside ahead of it, at least a slight bit. Could be totally wrong, but that's what it's looking like at the moment. Now, relative strength of the dollar is also up. So these are some kind of positive signs overall, looking as far as for the market. Now we've got the daily driver is still fear, and we're including Friday with this market, so it's going to be very volatile today. We've got options expiry tomorrow, but since options are going to be closed for trading, that means all of the volatility is going to hit in the last hour or hour and a half of trading today. Now we've had that flip with the long-term debt rate. As I'm saying, the rate's going higher. Larger companies and foreign investors selling off the longer term debt going into shorter term. Now this is one of the movers, Fed Chair Powell came out speaking yesterday, warning of an impact of the tariffs on the economy. And what he said in short was that the Federal Reserve is not going to jump to the rescue in cutting these rates. So President Trump kind of firing back on that, saying he's not doing his job. So this is just kind of a jab back at one another. If the economy does tank, Powell can kind of point the finger at the administration and then cut rates as he would like. therefore causing all of the inflation that he really wants to do in the first place. But that way he wouldn't need the permission or have to face the scrutiny by doing this. So with this, we had retail sales came in slightly better than expected. So still down, not really strong, but they're showing retail sales still coming in higher than what they thought they would. So they're looking at that as positive sign as well. Italy has sent their prime minister. She is in the United States currently. She is here to start the United States EU trade talks. So, kind of looking forward to her doing this is the markets, also the European Union, because she is kind of their best hope as far as these talks. She is also first country. So, Italy, very likely to get some favorable treatment, if you will. Now, with this, we are expecting the ECB to cut rates today by 25 bits. So that should kind of boost their markets. We did watch European markets started open and going green because there's this bit of easing going on for them. Now, I want to kind of turn this and put this point in here really quickly. Currency, as we're watching the euro, is going to drop on this, but their spending is increasing. Currency only exists as a measure of control. Now, it's supposed to be an accounting method, but via this accounting method, don't lose sight of the fact that this is only the accounting for who controls the assets. So if you look at the larger picture, you could really see, as a lot of people lose sight of this, currency really, it is only to show as this measure of control. And as they seize the assets and gain the control, you'll see the currency diminish in real term value. So let's move on a bit. We've got the calendar. We're getting jobless claims prior to the market open. Not too long from now, as I'm running a bit late. Housing starts and building permits, and then Fed governor speaking. So again, Jay Powell saying the Fed could face rising inflation as well as weaker labor markets, but that they are going to wait on rate cuts. So the only reason to do this is really poking back at the administration. So turning to some market bits, we've got China showing that they've got a weak consumer, and this is with Hermes. They did their reporting. They're one of the top luxury goods. Now, I kind of put out a tweet or an X post yesterday because there's an army of TikTokers coming out saying that Chinese goods have the same quality as some of these higher end Louis Vuitton because they took a hit yesterday. So if this is true, then why are they still the largest purchasers of these quality goods? And they're paying the prices for Hermes, at least they were, and Louis Vuitton. So these dropping are showing that they're a weaker consumer, and this is their top ends. We're watching both United States as well as China top end consumers, upper classes taking a hit, pulling back on their spending. Now, more in the news for the markets was Japan, as I was speaking about. Now, this is a quote from the US administration saying that they made big progress. So this was a boost in sentiment and also going to be a boost for the markets, was a boost for Asian markets overnight. They are going to meet again in about a month. And if these trade talks go positively, then Japan could win out bigly. So we've got a few other things in the stories. OpenAI, ChatGPT, Sam Altman, OpenAI, / all the same, working with SoftBank. Now they are looking at UK investment for their Stargate artificial intelligence project. Now, keep in mind, Stargate project got massive funding from the United States. So this is just another backdoor currency flow. Once again, control. So just keep that in mind. We've got global payments looking to buy WorldPay in a $24 billion deal. Now, global payments, the rails for the cryptocurrency shift in this progress. So again, we're looking towards this currency shift. It's happening more rapidly. And this is going to affect not just the markets, but in the larger picture, the debt, and larger than the picture of debt, currency, and your fiat currency in general. So we had tariff jitters spurring fastest retail sales growth in 2 years. I want to bring this up for a moment because all you have to do is scare everybody that price is going to rise massively very quickly here, and everybody rushes out and purchases larger ticket items, goods that have been sitting on the shelves because they're afraid that prices are going to go up. So what this does is this clears out all of the inventory that has been purchased at a higher price. So this kind of does a reset for retailers. We're going to see this come out positively in numbers, short term, longer term. It's going to show up in the real recession once the true numbers start showing themselves. So all of this purchasing that's been going on in the past couple of weeks is going to show up as a distortion, but not until later. And I think they're hoping that this will be handled and that Fed Chair Powell will give in and cut rates by that time. But how do we keep an eye on the real global trade? Is we're watching global shippers. Now, they are also waiting word on the United States, as the United States is planning to hit China linked vessels with port fees. So, this is another way that they hit back at this and they halt the shipping of the goods. And it's another negotiating tactic that they use in order to push things forward. So, with all of this, just one more last reminder, my apologies, but I want to make sure I'm not going to be here tomorrow. Markets are closed and will not be in Sunday. So with this, I wish all of you a happy Easter if you celebrate the rising, and wish all of you to stay free, at least until I see you again, my friends. I wish you a good weekend.